our videos. It's 2022 and we're about to start fourth quarter earnings season. It's going to be a wild one, not because of what happened in the fourth quarter, but because of what they might say will happen in the coming quarters. So, yet again, another important pandemic earnings season is upon us. And who leads it off? The big banks. So I brought you five of the big guys, and we're going to take a look at those charts because it was among the hottest sectors last year in 2021. And now the Fed may be raising four, five, six times. Who knows? But they're going to be raising. And you know what that means for bank earnings. It's a good story. And the banks, well, they've been in about a 13-year bear market, up, down, never really breaking out and still cheap. So let's take a look at the five big guys because a lot of you might own these or want to own them in your portfolio. What does the earnings look like? Let's dive right in. So the first one leading it off is JP Morgan Chase, ticker JPM. Now, it is considered the premier of the big banks. It didn't get into as much trouble during the Great Recession and the financial crisis. And you can see here, it's got a good track record, only has missed twice in the last 5 years. And it's put together a nice string here of 6 beats in a row here during the pandemic. Now, shares did briefly hit new highs in 2021, pulled back a little bit, but are trying to get there again, up 23% in the last year, but still cheap with a PE of 14. They pay the dividend, of course, and it's yielding 2.4%. Not too shabby, but not the best in the class, as you'll soon see. So our next stock is Citigroup. It's got even a better track record with no beats in the last 5 years, but the chart isn't looking quite as good. It did rebound off those pandemic lows, as you can see right here, and got a great rally, but it's pulled back quite a bit here. So it's among the cheapest of the big banks with a forward P of just 8.3. And its dividend is a little juicier because of the pullback, yielding now 3.1%, the highest of the group. It hasn't, it's got the great track record. So I am expecting another beat here. But we'll see where it goes. Over the last year, only up 0.6%, really underperforming the entire banking sector and even S&P 500, QQQs, just about everything last year. So is this a bargain? It could be one to keep on your list. Then we're going to switch over to what used to be the laggard of the group, Wells Fargo, but I haven't looked at it in a while and I was kind of surprised by this chart. So it's back to basically pre-pandemic highs here after beating 5 quarters in a row. And it's maybe no longer in the doghouse, was always considered to kind of be, the undervalued one. And now it's trading at 14, almost 15 times. And as you can see, it's got this big rally with the shares up 65% in the last year. Dividend is only yielding 1.5% though, a little bit on the low side and the lowest of all 5 stocks today. So is everything already priced in? We'll find out on this quarter, but Wells Fargo maybe making a turn here. Then I included Goldman Sachs because a lot of you own this and it is one of the big guys. Goldman Sachs, ticker GS, has a good track record during the pandemic with these huge beats, 7 beats in a row and 4 big ones in 2021. Will it continue with this kind of strength on the beats here in 2022? We'll see. It's fairly cheap still, even despite this big rally, with a PE of just 9.9. It does pay a dividend yielding 2%. 1 year, the shares are up 37%, but up big off of those 2020 lows. But again, as I just mentioned, not very expensive here. What will they be saying they're seeing for 2022? This is definitely one to have on your watch list as well. And then we're going to wrap it up with Bank of America, one of the best performers, I would say, off of those 2020 lows and busting out to 5-year highs. So this is a good change that we're seeing with some of these big banks is they're finally busting out of this range. That's a sign they may be entering into this new bull market I was talking about. They only have 2 misses here for Bank of America, so they've got a pretty good track record of meeting or beating. And they're taking that into this quarter. Shares are not among the cheapest ones. They're the most expensive out of these five, trading at 15.5 times. People willing to pay a little bit higher valuation for them here. Dividend yielding only just 1.7% now off of this big rally in 2021. Shares are up 50% in the last year alone. So can they do it again here? They've put together four in a row. Can they keep this momentum? I'm thinking yes, given where the Fed is, thinking yes on all these banks. So as you can see, a lot is going on with the banks. They used to be kind of boring to lead off earnings season. I was always like, meh, why am I leading off with them? But you have to. But this year, it's going to be the sector to watch. So you don't want to miss a single one of our earnings all-stars videos. I'm going to be covering even more banks as the earnings go along, plus all the other exciting earnings reports, including the Fang Man, all of the other big names that we're all watching. So be sure to get all of our videos at zacks.com/YouTube. You know where to get them. I'll also be tweeting out all the videos and even more charts. So follow me on Twitter or StockTwits at just my name, at Tracy Reinick on Twitter, and you can get even more charts. I'll see you again next time with some more earnings charts.